Hey, good afternoon. George Cavaligos for DragonSlayer. Not much opportunity really today. Got to stay up overnight again, it looks like. Mark closed on the highs yesterday. We traded up last night. Initially, it stalled against the 133 even, that round figure, that new handle level. A little bit of a sell-off after that, and then at midnight, as the Nikkei was down almost 3%, we traded back up to 133.02. And then the market's been under pressure since that time. We've basically been sitting right near the lows all afternoon and really all morning since we got into the office this morning. I think the market had traded up to, down to 25, which was the opening range last night, back up to 29, and then we went down and filled the gap that we left on the opening last night between 22 plus and 23 plus in the 10-year. And it's been just sitting near the lows here. We have not been able to rally, and that typically is not a great sign. I think the market's going to go and test the old highs at 132.17. It's not much. We're sitting right at 19 plus right now, but the market isn't giving you a lot here. And the other thing is, look at the daily chart. We've got the big, if you look at a candlestick chart, we have a big selling tail at contract highs with a close at the lows. That's not positive. We also are walking into the auctions, the 3-year auctions tomorrow. Fed's buying still. They're buying 10 years tomorrow morning a little bit. So I'm kind of hoping we can get a little back and forth tonight. I wouldn't be surprised to see a trade down to 17 initially, and then maybe a bounce back up. I think if we can get back up to that 28 to 29 plus area, you'd have a chance to put on some good shorts up there. But I think we might have to see some downside first, even though I'm not pressing a position right now. I don't feel very confident right now after Friday's little debacle. And, part of the whole DragonSlayer thing is, we all have our own personal dragons that we have to wrestle. And a lot of times mine is, or one of mine, I should say, I've got plenty of them. My main one is I always love to sell the market. It comes from being on the floor for 30 years. We always loved the bear move. Typically, as a broker, it meant you're doing more business because the dealers would use the futures to hedge when the market was going down. When the market was going up, they wouldn't do much in the futures business, so it was quiet and boring, and you weren't getting any positive feedback as a broker. As a trader, you guys know as well as I do that when it goes down, it's much more exciting than when it goes up. I don't know why that is, but it is. It's a statement of fact. It's also one of my dragons that I have to wrestle with. I'm more inclined to be selling rallies in almost every environment. Even though you shouldn't be selling rallies in a bull market, you should be buying dips in a bull market. Problem is, I think this bull market is aged. Look at the whole curve. From the long end ultra bonds, they're, I think, 4 points off their all-time highs. Bonds are 3 points off their all-time highs, roughly. 10-year notes are basically on their all-time highs. So there's this strange hump in the middle of the curve, basically, where the 10-year is leading the way higher. 5-year has a double top, possibly. It got up to its old highs at 124 and some change just last night. Maybe a double top there. In 2 years, again, don't even look at that stuff. That's the Fed's playground. That's not our playground. But it's weird when the whole curve isn't going up together. I talked to a lot of people about it today. I think one of the better explanations is that the 10-year is much more utilized by mortgage traders. There's been massive buying of mortgages by the PIMCOs and the BlackRocks and the Fortress type of guys because they're anticipating the next QE move from the Fed is going to be where the Fed's buying mortgages again. Like that worked before. Whatever. That's one explanation. And as these guys are buying mortgages from the dealers have to replace that by their similar hedge type vehicle, which is the 10-year. Okay, back to the current markets here, and we'll try to figure this out. 132.17 is obviously the old high. We don't want to, the bulls do not want the market to overlap that old high. It takes away some of the bullish potential there. My train of thought's going down the toilet. Open interest, obviously up huge on Friday, 59,000. So we have a lot of new longs, but we haven't pressured them yet. We haven't even got back below, what was the high on Friday, 22 plus? We're barely getting overlapping that. I keep thinking we're going to see some sell stops in here. Probably not until you start trading below 19.5. That was sort of the afternoon low in the 10-year. Down to 17. There's going to be some small stops. I don't think you run into the big ones until you get back below 17. I'd like to see a test of 17. I think that's what we're going to see. 17 is big. The old highs, obviously. So we'll see what happens down there. Again, the market's just sitting here. God, since I think 10:30 this morning, we've been stuck between 19.5 and 21.5. Oof. I kept buying them, 21s, 22s. I think I tried 3 times to buy them, and I think I scratched 2 of them, and I made a half a tick on 1. So not a productive day today, but we didn't lose any money. I think I paid commissions maybe. I don't even know. I think I lost maybe a little bit after commissions because I only made half a tick. So, all right, it's a scratch. Looking forward here. I'm not going home with a position. I've got to go to a meeting tonight, but I think if I did have a position on, I'd have a small short. Looking for that 17 plus level where I'd cover at least half at that point, and then look for a bounce back up. The important levels to watch on this bounce back up are 25, 27, 28.5 to 29.5 would be the best short area. That's what I'm going to leave my offers in tonight if I go to bed early or whatever. I'm still fighting some kind of nasty bug from late last week and not on top of my game yet. But that's about it, guys. Have a great night, and back at it tomorrow morning bright and early. I'll take a look at seeing things if there's anything there tonight. Today's volume was horrible. I gotta imagine open interest is going to drop. Question is by how much. You know, like I said, it was up 59,000. Those are all winners all day today and all night last night. So I'm sure a lot of those guys took some chips off the table. Makes sense. And now we got the auction. So the dealers have the book. We've got the 3-year tomorrow. Very little news. Let's see what the market does. I'm anticipating some dips in here in front of the auctions. So we'll look to buy those dips and sell the rallies on the Fed buybacks.